Good morning, guys. Hello and welcome to Money Control's live stream. You're tuned into a fresh edition of Opening Bell with me, Lovisha Darad. Well, it's a fresh week, and what an action-packed week it is likely to be. We have the Donald Trump swearing in as the 47th President of the United States later tonight, where the markets have been keenly waiting to understand what his policies are going to be, what his tariff stance is going to be. And then we have also the Q3 earnings season that is going on. But first things first, the GIFT Nifty, that is pointing out to a very positive start today. Even the pre-open rates are indicating a good start for the Indian markets. The Nifty is back above that 23,200 odd levels in the pre-open. That is on the back of a good global handover. We saw that the US markets finished last week on a very strong note. Today morning also, Asian markets that have also started the trade with good set of gains as well. So lots more lined up. Don't go anywhere. Keep posting your queries on our live feed and we'll take them up shortly as well. We'll also be discussing what your trading strategy should be during this Q3 earnings season with our experts and talk about certain stocks in focus as well. But first things first, let's take a quick look at the top headlines this hour. US stocks close higher on the last day of trading under President Joe Biden and ahead of Donald Trump swearing in as president for the second time later tonight. The Dow Jones rises over 330 points, the S&P 500 gained over 1%, and the Nasdaq rallies over 1.5%. Asia mirrors Wall Street moves to start the week on a positive note as investors await clarity on the policy of the US administration. The GIFT Nifty is also indicating a positive start for our own markets. Oil prices climb as supply concerns over Russian sanctions continue to persist. Brent remains $80 per barrel. Wipro and Kotak Mahindra report a strong third-quarter performance as revenue and margins beat estimates, while Kotak Mahindra Bank was better than expected quarter. World Economic Forum's annual meeting kickstarts in Davos. Top leaders, companies, thought leaders will converge to discuss on the theme of collaboration in an intelligent age, the ongoing Russia-Ukraine war, and artificial intelligence over the next 5 days. All right, if we take a quick recap of what happened last week, we did have the IT earnings season which took the center stage, and that spooked the investor sentiment as well because we had Infosys which planned wage hikes implemented in two-phase manners, and that is expected to impact margins, and that's what created a rattle in the D Street as well. But overall, last week Nifty and Sensex that did clock second straight week of losses and has declined over 3% in just 2 weeks. Nifty IT, as I was discussing, that was the top sectoral laggard, and it saw this sharpest weekly decline in nearly a year. So it also hit a 1-month low as well. Now this week, we also have the Q3 earnings season enter its third week, and stock-specific action is expected to continue. This week we have names like HUL, BPCL, HDFC Bank, ICICI Bank, which is coming out with its Q3 performance. Today we also have some new age companies which is reporting results. The likes of Zomato and Paytm will be reporting their third quarter performance. And then we have your Oberoi Realty as well as Dixon Tech and IDBI Bank as well reporting its third quarter performance as well. If you look at the primary markets front, well, we have Lakshmi Dental shares which will be listed on the bourses. Remember that this IPO did see a healthy subscription of over 100x. So a lot of excitement going on before this listing as well. Now let's take a quick look at how today's trade setup looks like. First up on your screen is the option queues data. Well, Nifty put call ratio that fell to 0.91 levels from the previous session. So some level of positivity does prevail. The next on your screen is the F&O ban list. Well, Canfin Homes is added to the list, while Aarti Industries, ABFRL, Angel One, Bandhan Bank, Hindustan Copper, Kalyan Jewellers, L&T Finance, Manappuram Finance, RBL Bank is retained. And the next is the fund flows data on your screen. FIIs in the last session did sell about 3,300 crore rupees worth of Indian equities. DIIs on the other hand, they bought around 2,500 crore rupees worth of Indian equities. Now just a couple of minutes before we go to the opening and how the opening pans out as well. But let's quickly get on board with our technical expert of the show, Sudeep Shah of SBI Securities. Sudeep, good morning. So good to have you back. Last week Nifty barely managed to close above 23,200. Now that we have the Trump swearing in and the Q3 results is going on. So do you expect the range bound movement to continue this week as well?
Good morning, Lovisha. Yes, I do expect this range-bound momentum to continue because see, last week what we had seen, it was a complete 300, 350 point ranged week for Nifty, and this was on the backdrop of the previous 2, 3 weeks where Nifty had seen quite a bit of selling pressure. So, in my sense is that also the expectations in the build up to the union budget, which is scheduled on 1st of Feb, will also have a impact on the market sentiments in this coming week also. So, be nimble footed, be stock specific. Wherever you see any structure, that is where one needs to trade or invest and focus on quality.
Okay, focus on quality. But Sudeep, couple of bank earnings that have also trickled in. We saw Axis Bank came in last week as well, and over the weekend we saw Kotak Mahindra Bank's Q3 figures, which was fairly better than expected. So how do you expect the Bank Nifty index to perform this week ahead of ICICI Bank as well as HDFC Bank results?
Lavisha, if you see if you see both the indices, Nifty as well as Bank Nifty was some kind of a underperformer over the last 3 to 4 weeks now. So the Axis Bank result got discounted in the last week, but the results of Kotak Bank over the weekend. Now this could act as a surprise package for Bank Nifty because generally we don't expect this kind of volatility or momentum with Kotak Bank opening 7-8% up. So next 45 minutes to 1 hour, we'll have to see whether this gap up sustains or not. And if this gap up sustains and you see some kind of participation from ICICI Bank, then yes, 48,200 could act as some kind of a floor for Bank Nifty. And you could see levels of 49,000, 300 on the upside also. So we expect positive momentum in Bank Nifty at least for the next couple of days.
Okay, next couple of days, positive momentum you expect. But let's see, with first rates ticking in, and we have Nifty opening strongly above that 23,250 mark. So strong open for the Nifty 50 index. If we see the decline and advance, well, definitely the advances are getting a upper hand at this point of time. Nifty Bank also has opened strongly, 0.5% gain above that 48,800 mark as well. Sensex also has opened above that 300 points with a gain of 350 points above that 78,950 levels as well. So yes, a strong open for the markets as well. Let's see how the mid cap and the small cap indices have been doing, because last session we saw that the broader indices had outperformed the benchmarks as well. Mid caps up about 0.2%, small caps also seeing a gain of about very mild gains, but 0.2% as well for the small cap as well. India Wix, that has also spiked up. It is up above that 16 odd levels, up about 4% at this point of time. We have the Trump swearing in ceremony which will be taking place tonight, so there is some kind of volatility which is keeping the investors nervous at this point of time as well. If you look at some of the sectors, Nifty Auto Index definitely on the losing end. Nifty Metal also, snapping its fourth day of winning streak, and now seeing some profit booking and down about 0.3%. Nifty Bank, as I discussed, it has opened strongly. Nifty FMCG unchanged at this point of time. Nifty IT Index has opened strongly with a gain of about 0.4%. Nifty Pharma Index flat at this point of time. Nifty Realty Index also flat at this point of time. If you look at some of the top gainers on the Nifty 50, that include Kotak Mahindra Bank, reaching a sharp gain of about 6% after their better than expected Q3 performance. We saw that the net profit as well as the net interest income had grown by 10% year on year in the third quarter as well. Even the management has said that the credit cost from here on, the worst is behind for credit cost as well. Reliance Industries, a strong set of numbers also came in for Reliance Industries, seeing a good gains, 0.6% gain at this point of time. SBI Bank, SBI is also one of the top gainers as well. Now, Bharti Airtel, HUL will be reporting its Q3 figures this week, and it is seeing a good start, 0.5% gains. If you look at some of the top losers on the Nifty 50, that include the likes of SBI Life. SBI Life did see a good, profit growth in the third quarter. However, it's down today, 1% downtick seeing for SBI Life. Shriram Finance, sharp fall, 5% downtick for Shriram Finance. Tech Mahindra, Tata Motors, Tata Steel, all of them seeing featuring on the top losers on the Nifty 50 as well. But Sudeep, Nifty IT index today it has opened with a good set of gains, but it was one of the worst sectoral performance last week. Today we also have the Trump, which is going to spell out certain policies as well. Do you believe that there are certain bullish positions this is forming up on the charts?
Lavisha, it's just 0.5% up yeah, today if you see from the Friday's closing and the kind of battering that this index had seen over the last 3 to 4 sessions. I guess it's still time that we need to wait and watch for this index to at least cross and sustain above 42,500, 42,550, and then take a cue that yes, that some kind of a bottom formation is happening here because just a breach of 42,000 on the downside for this index could lead to a retest of 41,700, 41,500 on the downside. And the sentiment in the last 4 to 5 sessions has gone for a toss. Post the TCS numbers, where we saw the IT index gapping up and retesting 44,800 almost. That was the day from that every session IT index has seen some kind of a losses, and they were quite deeper. So I feel just need to wait and watch. Let this Trump swearing in ceremony go by, and then 42,500, 42,600 levels need to cross, and one can go long thereafter. No doubt, IT index has been the best performer over the last 3 to 7 months, 6 to 7 months almost. It's just that the last few sessions have been bad. And long-term prospects seems good, but short-term, yes, there could be some kind of a challenge here.
Okay, some kind of challenge. But as a sector, what are you excited about the most in this Q3 earnings season, Sudeep?
See, till now, not too many positive surprises have come. It's just either in line or some kind of shockers. But what I'm expecting is that post a decent set of correction from the defense names, railways, even power space also could spell out a surprise. So I am bullish on all these three sectors per se, and with the budget coming up, defense, railways, there could be some higher allocation here. And let's not make any mistake here. See, what's happened is that defense and railways in the last before the last 6 months, they were the darlings of the market. Every day you would see some kind of a positive momentum or some kind of a positive news flow coming in these spaces. But now a lot of correction has already happened. Profit booking has happened, and the intensity of the government and the focus of the government towards both of these sectors have not yet died down. So yes, I feel that post this correction, these are the sectors to have a look on, and they definitely could have some takers in the budget also. So they are there on my watch list as of now, and let's see how the things pan out in the next week or so.
Okay, capex related sectors that you're bullish on at this point of time. But let's take some stocks in focus. Kotak Mahindra Bank, well, one of the top Nifty 50 gainers as well. And like we talked about, the lender did report its Q3 figures over the weekend, and which was better than expected, where we saw net profit and net interest income that rose on the same level, which is your 10% YOY uptick. On your screen, we can see the same as well. Asset quality, however, that saw a slight deterioration, mainly because of the retail MFI loans. Sudeep, the management has also said that the credit cost rise is over from here on. So how do you expect the bank to perform on the charts? Today also it's seeing a very sharp rise.
Lavisha, I feel that this could act as a surprise package for Bank Nifty, as I was just mentioning in my opening commentary also. Because see, this stock has not done anything since December 2020. Virtually, it is in the same range between 1700 and 1900, 1950. And this is probably the first quarter after so many quarters where we have seen some kind of a positive commentary, or so at least better than expected set of numbers. So I feel from the current levels, Kotak Mahindra Bank should do ideally to 2050, 2100. It should break the range. We are seeing some kind of a probable a trend line breakout here. So in the next several weeks to months, I feel the stock could head up to 2050, 2100 levels, and then there could be a bigger breakout also in the making. So I am upbeat about this stock. I feel on the downside, 1800, 1830 could now act as a strong support, and this could see some kind of a positive momentum in the coming few weeks to months.
Okay, all right. 2100, that is what we are aiming for. But let's move to the next stock in focus. Again, we have the RBL Bank. Well, the stock is down about 2%. Quite a disappointing Q3 performance coming in now, where we saw that the net profit took a sharp knock of 86% Y on Y in third quarter. This was mainly because of the twofold rise in the provisions, which basically came in due to rising slippages in its MFI portfolio as well. On the other hand, NII that modestly grew by 3% year on year in the third quarter. Sudeep, RBL Bank, it has been a rank underperformer past 6 months. It looks like the trend is expected to continue.
Yes, Lovisha. If you see the RBL Bank here since December 2023, the stock has been in a tremendous downtrend. If you look at it from a weekly chart perspective, also, I in the last I guess last 40 to 50 weeks, there have not been more than 2 to 3 weeks where the stock has given positive closings. So it's a structural downtrend. Even when the Bank Nifty was positive, Bank Nifty was around 53, 54,000. You'd see selling pressure in this stock. So I'm not too positive about this name. Maybe just because today it is finding buying support from lower levels around 145, 146. But yes, closer to 155, 158. The selling pressure could once again creep in, and it's better to reduce exposure to this and go on with quality names, maybe ICICI Bank, Kotak Bank, or HDFC Bank. From a medium to long term perspective, switch from this stock to all these three names should be, I guess, on the cards. And a lot of traders and investors would actively be looking at these set of numbers where the growth is absolutely dismal. So I guess a switch should be a right option here into top quality banks.
Okay, switch for from RBL Bank at this point of time. But let's take some viewer queries. They've been waiting up and they have lined a lot of queries at this point of time. Well, Naveen is asking the view on Skipper at this point of time. Naveen, Skipper as a stock, Sudeep, after the December highs, the stock has been on a downward spiral as well. Where do you expect the stock to go from here on?
Let me say, there's nothing bad with the stock now. If you see the stock right from April 2023, from lows of 95, 100, it had grown sixfold. Now it made a high of 650, and then there is this correction of 25-30% from higher levels. And post such a big rally, we've seen corrections of 30, 40, even 45% in the last several months into a lot of mid cap names. And from there also, there have been some bounce backs. Where the numbers have supported. So I guess in the coming few weeks, we need to watch out for how the quarterly numbers pan out here. Trend per se, the stock has retested 430, 440 on the downside, which was the prior breakout point in September 2024. So one round of correction has already been over. So what I feel is from here, there could be a pullback, maybe closer to 520, 540 on the upside, and then we need to take it ahead from there. But yes, from here, with supports are at 440, there could be a pullback up to 530, 550 levels in the coming few weeks. And then the results and uh, overall market sentiments would take over from there.
Okay, 530 levels for Skipper coming in. Naveen is also asking the view on Reddington for positional trading. What do you expect from Reddington? The stock has been seeing a sharp, run up since the past 5 days. Also today, also it is up about 6% in today's trading session.
Absolutely. See, this kind of chart pattern here is on a breakout. If you see the chart pattern, is quite indicative of a bigger breakout in the making. Last several weeks, 5 to 6 weeks, we have seen the stock consolidate between say 198 and 215 with a positive momentum. So today the breakout is indicating that yes, and that is with volumes also. So what we feel is from the current levels, 215 would act as a strong support, and on the upside, 240 to 50 levels could be witnessed in Reddington. So yes, if he's holding it, then should continue holding it with 210 as a stop loss on the downside from a trading perspective. From a position perspective, the stock is, I feel it's headed closer to 280 to 300 levels. So keep holding it. And on dips closer to 215, 218, could even add some positions.
Okay, all right. Hold at this point of time for Reddington coming in. Let's move to another viewer query. That is your Anand Swaminath is asking the view on L&T in the immediate short term. What do you expect from L&T, Sudeep? Because past 6 months the stock has been, hardly moved anything, down about 2% as well.
Lavisha, if you see the stock right from March 2024 is in a broader range between 3,300 and 38, on the upside, and we expect this range to continue. This in a way, while we have seen the markets correct from higher levels of 26,000 thereabouts, 26,300 levels. The stock not even correcting 3 to 4% or 5% from the highs here is indicative of some kind of outperformance, and we feel even if there's this consolidation which could be there for another few months, and that is in line with all the other stocks also within the same sector. They are also either correcting or they are consolidating. So I feel even within the sector, L&T is outperforming with the kind of numbers, the quarterly numbers of the last few quarters have been really good. There have been no major disappointments. So I feel one could continue holding it from a long-term perspective. On dips, this could even be added. So yes, continue holding it from a long-term perspective.
Okay, continue holding from a long-term perspective. Let's move to another viewer query. That is, your Renu Keshwar is asking the view on Kalyan Jewellers as a stock and stock performance. So, like Kalyan Jewellers, if you look at 1 month performance, the stock has been down about 25%. Today, showing a sharp buying interest, up about 7%. What is your advice at this point of time, Sudeep?
Lavisha, I feel one should avoid Kalyan Jewellers as of now. A lot of news surrounding this name is wherever you see, even it's on the social media or everywhere, it's just Kalyan Jewellers and management news or some kind of. So I feel it's better to avoid names where there is a lot of noise. And especially after this sharp correction from almost 800 levels to 500, and that also in a matter of 6 to 8 sessions. So a bounce back right now couldn't have been ruled out given the kind of oversold nature of the stock. But sometimes these also act as a trap. So I feel it's better avoided. And in case someone is holding it from higher levels and wish to exit, then yes, rises to 575, 80, which is closer to the 200-day moving average. Should be used to exit or reduce positions and add into good quality names.
Okay, all right. Let's move to another viewer query. Well, Shweta is asking that she's bought Titagarh at 1752, and what levels should she exit and reduce her losses? Sudeep, you were talking about railway stocks and how you're bullish on railway theme ahead of the budget. What do you advise for Shweta for Titagarh Railways?
Laisha, I feel right now in the last several sessions, we are seeing some kind of a buying support from lower levels closer to 1000, and the stock has managed to reach say 1100. But for me, for this stock to have a major rebound, levels of 1000, 1110, 1120 needs to be crossed, which is closer to the 20-day exponential moving average from a short-term perspective, and then we could see this stock rebounding back to 1300, 1350, 1700, 1750. But buying zone is very far away. But I feel at least let us take one level at a time. At least a move till 1300 could curtail or reduce her losses, and then take a call from there on. On the downside, keep a stop loss of 1000, which is the recent swing bottom. And I expect there could be some kind of a momentum ahead of the budget, maybe in the coming week or so. So keep holding this with stop loss at 1000, and rises to 1250, 1300 should be reevaluated whether she wants to reduce the losses and then exit accordingly.
Okay, 1300 levels that you're advising. But let's move to another stock in focus, that is your IDBI Bank. Satya is asking what is the next target for the short term ahead. IDBI Bank, we did see media reports that did say that they have advanced to the next stage of divestment process as well. And we also have the Q3 figures which would be rolling out in today's trading session. What do you expect for the next term target, Sudeep?
Yes, so both of these events would be extremely critical to watch out for. And if you see in the last few sessions, was that I guess on last Tuesday the news had come regarding or a lot of these PSU banks, and post that we have seen the stock still continuing its up move. So I feel that on the weekly charts, it's a bullish engulfing candlestick at lower levels. So 78, 79 zone will act as a strong support over here until this is held. Even levels of 89 to 92 could be on the cards. So continue holding this if someone is holding. It's just that the result uncertainty, how the numbers could pan out for. So that is the reason the support level is slightly deeper from the current zone, which is around 79. So 79 should act as your trading stop loss for holding the existing positions, maybe closer to 89 and 92 levels.
Okay, all right. Let's move to another viewer query. Well, Ravi Teja Kona is asking the view on Dr. Reddy's Lab. Dr. Reddy's Lab, past 6 months, the stock has been an underperformer, Sudeep, but Q3 results, that will be watching out for this week. So, what are you expecting from the short term perspective for Dr. Reddy's?
Lovisha, I feel if you look at the weekly charts last 3 weeks, there have been lower peaks, lower highs here, and there was a resistance closer to 1400. And post that, the stock is now little below 1320, 1310, which was an important support. So unless and until from a trading perspective, the stock does not cross above 1320, I feel one should not be too bullish or too over leveraged or exposed to this stock on the long side. Just let the stock let the results come, let the stock cross 13 15, 13 18, and then can bottom fish with a 1290 stop loss. So 1315 to 1320 levels will be important zone for the stock to cross and sustain, and then one could have a positive view on this.
Okay. Just one last question before we let you go, Sudeep. But what are your trading picks at this hour and in this volatile market as well?
Uh, Isha, I feel one stock which is there on my radar is BDL. As I was just mentioning about the defense space, this is one name where we have seen some kind of a decent breakout on the charts on the daily as well as the weekly charts. So from the current levels, if you see, BDL looks good for 1400, 1420 on the upside, and one can buy this with a stop loss of 1270.
Okay, Bharat Dynamics at this point. But all right, with that, we have to let you go, Sudeep. Thank you so much for your time and for answering the viewer queries, and thank you.
Thank you so much, Lavisha, for this session.
Okay. Okay, let's take a quick check of the markets before we move on to the next guest of the show. Markets, they have, most of the gains that we saw in the opening session that have, come down, and Nifty is down about 22 points, 1/10% downtick at this point of time, 23,180, below that 23,200 odd levels. Even Sensex is below that 76, 650 odd levels as well. So most of the gains that we saw in the earlier session, that has been erased and rubbed off. If we see most of the losses that have come in from the auto index, Nifty pharma index is also down at this point of time. Nifty oil and gas also not doing well at this point of time. Nifty, if you look at the broader indices, they have also seen a cut of about 0.3%. Nifty mid cap index and even Nifty small cap index barely in the green at this point of time. So yes, markets have taken a little bit of a knockoff from the earlier that we have seen. But on that note, let's move on to the next guest of the show. We have Daljit Singh Kohli of Roha Asset Managers. Daljit, good morning. So good to have you.
Good morning.
Daljit, let me start off. We have the Trump swearing in today. So how much do you believe that the markets have priced in this tariff rhetoric that he's been very vocal about?
I don't think so. We can quantify that how much has been priced in. As of now, unless he starts actually acting, we will not know what is in his mind. Now, he has been always speaking about in very harsh terms, but when the actual time comes to take an action, we have seen that, especially in case of H1B visa, we have seen he's not taken that kind of hard stance. So maybe, and more market is believing that ultimately he's a businessman, probably would want to uh, strike the deal rather than just keep maybe vocally he may be posturing something very bad, but in action we might not have that kind of thing. That is our belief also. In our note a few days back, we have written this same thing, that market is probably too much nervous before the event, and most probably after the event we will come out in a better shape. So to quantify whether market has already fully factored all of that, I don't know. We cannot take that call right now. Maybe in a day or in a week or so, we will be able to get better clarity on that from first few instances of how he goes about it. But this is very sure that the time period ahead would be quite volatile. No? So basically, if you are saying that one man's fancy is going to drive the entire world markets, then obviously you can't take, you don't know what is in his mind every day. No? And it will be like predicting every day what is going on in his mind. What we can go with the previous instances is that probably, and what will practically work for US also, not only just for India and other countries, but it is also for their own self. He will probably take some practical decisions, and therefore it will not be as bad as market is believing as of now.
Okay. But Daljit, the dollar index is rising above that 109 at this point of time. Even US Treasury yields above that, 4.6% that we have seen. What do you expect from what Trump is going to announce? Do you expect, if there could be some, ease in the market that could come about, and we could see some money which could, flow back to emerging markets like India as well?
I think it's too early to call that out right now because again, it will depend upon what actions really happen. We will have to wait. One thing is clear that probably we are not looking for too much of help from Fed side. So Fed will probably continue with the similar stance what they have been doing for last few years. We may not see too much of reluctance or maybe too much of relief from coming from that side because inflation is sticky there also. Now, if he is talking about putting more tariffs, putting more restrictions on imports into US, then that will ultimately lead to increase in costs for US. So then, which means again that inflation will be higher. It won't go down. So Fed will have very little room to maneuver. So we are not expecting in our base case that Fed will be doing too much for the markets. We should expect this similar kind of interest rate scenario there, and maybe one cut probably over a period of time. Now, what is also in this right now, the yields and the dollar index, there is a lot of element of sentiment. Now, that probably will smoothen out. So that our understanding is that probably this dollar index peaking will peak out somewhere near this level, maybe another 1 2%, 4%, 2 3%, but it is somewhere near the peak, and from there onwards it will start seeing some kind of relief, which will mean that some in EMs can expect some kind of positive inflows. Now it will also depend not just these two, dollar index or yields will not only be the driver of fund inflow into EMs, it will be also the earnings growth, which is again a very important factor. And I think that has changed a lot. Unfortunately, quarter three numbers, which have till now come, they have also not instilled too much of confidence there. So probably we'll have to wait for this EM inflows to happen.
Okay. Daljit, as you rightly pointed out, that it is a slow start to the Q3 earnings season as well. So, which sector are you keenly watching out for? Anything that you are excited about? Anything that you advise investors to completely stay away from at this point of time?
See, stay away will, I don't think there is anything from the number side. There will be a howler set of numbers or anything which we are predicting from any sector. But market is looking for growth. No? For after quarter two, there was a lot of this narrative set up that H2 will be much better than H1. Q3 we'll see some recovery. Q4 will be even better recovery. Market would want to see all of that. No? And unfortunately, till now, the numbers which have come, they have not shown that. So that is where I think the disappointment will lie. It will not be from any one particular sector which will show a very bad set of number or anything that kind, but it will be across. We are all looking for growth. See, markets are at the P, they were building in some 15% kind of growth, and suddenly you start seeing 5% growth, 2% growth, flattish growth, companies talking about deferring the numbers over to next quarter, then that leads to moderation in expectation and that leads to disappointments. So probably what we are right now, market is wanting to know is some kind of positive momentum coming from various sectors. It won't be any sector specific. Slightly positive or the sectors where we are bullish, where we expect that there will be some good positive turnarounds or some positive momentum there. Those will be pharma basically, which has good visibility. There, I don't think there is likely to be any hiccups there. Pharma, agrochemicals, specialty chemicals, they might see some positive numbers there.
Okay. Daljit, you said that market is watching out for growth from this Q3 earnings season. Last quarter we saw 4% growth from Nifty. What are you anticipating this time? What is the street anticipating this time? What the growth should be, and whether or not the valuations at this point has converged with that growth, or is it still higher at this point of time?
Some of the froth has definitely gone out of the market, so that is good for the market because market has actually taken into stride that growth is slowing down. But still, there are some pockets where too much of froth is still there. Many of the stocks, some sectors like defense, railways, PSUs, the FAD sectors, which we call, they have been trading at phenomenally high valuations, abnormally high. And then those corrections, so 20-25% correction has happened from the peak, but still they are in the froth region. So there, I think there is a lot more correction that requires to be done. That has to happen. But on the overall front, if you say that at the index level, probably it's not as frothy as it was 3-4 months back. So things have become slightly better on the valuation front. Now, we don't tend not to take a call on the aggregate picture because that's very misleading. No, because some one or two companies can distort the numbers here and there. And in any case, we are purely bottoms up approach. So we look at very specific to stocks, not even the sectors also. So for us, I think we believe in the fact that the entire market doesn't go down at one place and the entire market doesn't go up at one time. So there will be always some pockets of high valuation, some pockets of. It is our job as fund managers to find out those opportunities. There are, as I said, in case of defense, railways, where a lot of expectations, a lot of growth was built in. Numbers are coming, but the expectations have been much more, and the price which has factored in, that is much higher. So that means the time correction has to happen. 3-4 years they will have to give because you have already factored in what is going to happen 4 year hence. So those things will continue, and therefore we have to be cautious about those. But then always there are stocks you will find which are still valuable, which still have some potential, where earnings CAGR can be 25%, return ratios are strong, cash flows are well intact. So those kind of companies we would.
Okay, Daljit, I just have a two-part question here. If you can quantify what the street is anticipating or how much is it pricing in from the growth perspective from Nifty, from this Q3 earnings, whether it's 10%, whether it's 12% that they're expecting from India Inc. And also on the second one is that, you talked about time-wise correction that is anticipated in the markets as well. So when do you expect a meaningful recovery to take place in the markets as well?
Right. So as far as expectations from Nifty earnings are there, market is consensus, I think 10 to 12%, which has been there since last quarter also. So there, people have not cut down their expectation because of that narrative that H2 will be better. Now that means that H2 asking rate is much higher. And as we talked just now, that quarter 3 start has not been so great. So that means asking rate is still very high. So our understanding is that for FY25, this 10% expectation, 10 to 12%, will have to be reduced to for 5-7% probably, single digit. It will come. But market is factoring in FY26, and where again the numbers are between 12 to 15% kind of earnings growth. Uh, we are suspecting that even 26 we might have to reduce or downgrade these numbers. So as of now, it is 10 to 12%, but probably with after this quarter 3 numbers, we might see or expect some kind of downgrades on the growth number. On the time-wise correction, I think, as I said, a lot of growth has come off from the market, especially from the frontliners. So, market is now coming closer to the long-time average. It's not obscenely priced. So, probably now market will look for some kind of triggers from budget, which will be if there is some kind of capex related announcements, if some kind of consumption, because consumption has been lacking for quite some time. So we might see if there is some some efforts done on the increasing disposable income at the hands of citizens, maybe through tax cards or something of that kind. I think that will give some kind of trigger points for the market to perform. So basically, in nutshell, if I say we have identified that there are 3 reasons for market, which where market is finding concerns. One is the Trump thing, second is earnings, and third is the budget. Now, Trump issue will get over today or in next 1 week. Budget also 1 week, and then earnings probably over next 15 to 1 month kind of. Next middle of February, we'll have most of the earnings out. So I think by end of February or so, we should expect some triggers in the market.
Okay, all right. Daljit, just one last question before we let you go. You mentioned that, the earnings growth is expected to pick up, from FY26 onwards, that, most of the people are watching out from then. What do you suggest for fresh investors to do at this point of time? Should they remain on the sideline? Should they remain on hold until, more clarity and more growth has picked pace from the India Inc. front? Or what should they do? Should they wait at this point of time?
I think waiting never helps anyone. Market you can't time the market. No, you have to be in the market and take the advantage of that. And nobody can pinpoint exact date when will the market bottom out. So for waiting for that period, in fact, we all know from the history everywhere which has been talked about, more money is lost in waiting for a correction than actually the correction happens. So we don't have to wait for any of these things to happen. And in any case, as we said, we have, as an investor, we don't have to buy the entire market. We have to buy few stocks, 10, 20 stocks, 5 stocks, 2 stocks. No? And if you can't find yourself stocks, then you go to the fund managers who are experts in doing that. So you have to look at those specific 5, 10, 20 stocks pocket, which will perform. And that out of 4,000, 5,000 listed companies, it is not difficult to find. You will be able to find at any point of time. So waiting for market to correct, waiting for things to happen, that will keep coming and going. So you will miss out the big opportunity. In fact, the note which I was mentioning a few minutes back, 3-4 days back when this mayhem was happening in the market, we actually wrote that seize the opportunity in volatility. That was the heading of that note. That instead seize the opportunity in volatility. So we wanted people to actually come forward and invest more in this period because like in our case, just as a disclosure, in our company, the 25, 30 companies that we hold, we have not trimmed any of them. In fact, we have used this opportunity to add more. Some of them we have added because we have analyzed each and every company and found that their earnings growth trajectory is intact, their cash flow generation trajectory is intact, then I don't need to worry. It is just that the same stock which was earlier available at X is now X minus something. It is becoming better for me that over a period of next 2 to 3 years, this will work. So for that, we have to keep on analyzing day in, day out about these companies' actual performance with our expectation. And fortunately, we found that most of them meet those expectations. So like that, if you keep analyzing your portfolio, you will be able to get those ideas. You don't have to wait sitting outside.
Okay, all right. With that, we have to let you go, Diljit. But thank you so much for your time, and we hope that we connect with you soon.
Thank you.
Okay. All right, let's take a quick check of the markets at this point. Well, Sensex and Nifty did see a good start, but however, now it is very flat in the green at this point of time. Sensex is up about 17 points above that 76,600 odd levels. Nifty is also above, testing that 23,150 odd levels, 23,200 odd levels as well. So yes, we started off great, but there is some sense of volatility which has kicked in. India Wix also is a reflection of that. India Wix up about 7% at this point of time. Nifty Auto Index seeing a sharp fall, 1% downtick for Nifty Auto Index. Nifty Metals also not doing well. Nifty Pharma also in one of the top laggards as well. If you look at what is doing well on the markets, that is your Bank Nifty index up about 0.6%. Well, of course, majority of the gains have been led by Kotak Mahindra Bank's gain as well. 9% at this point of time for Kotak Mahindra Bank, and we can see others like Wipro as well doing well. Wipro 7% uptick, NTPC 1% upticks, SBI as well 1% at this point of time. So yes, lots and lots of action which is coming in, and we also have Donald Trump swearing in for later tonight. So we'll see how that pans out as well. But with that, we have come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 p.m. for Closing Bell, and we will be discussing about how the market is developed, what the stocks were in focus. Until then, signing off. Do stay tuned to moneycontrol.com for all the news updates and market insights.